Hi and welcome to our analysis of Ramkrishna Forgings Ltd, a leading player in the forgings industry. Ramkrishna Forgings, established on November 12, 1981, is primarily involved in the manufacturing and sale of forged components for automobiles, railway wagons and coaches, and various engineering parts. It stands as the second largest forging company in India. The company specializes in producing forgings and metal products. Its diverse product portfolio includes engine components, front and rear axle components, and transmission components, among others. These forgings are utilized across various industries and sectors such as automotive, earth-moving and mining, farm equipment, general engineering, railways, and steel plants. The company serves both domestic and international markets. Since 2019, the company's stock has generated impressive returns, with a CAGR of 58%. And it has more than doubled its revenue since 2020. In this video, we will delve into the sector outlook, Ramkrishna Forgings product portfolio, operational capacity, revenue segments, shareholding, management, financials, management outlook for the future and strengths and weakness. Let's get started on the stock analysis of Ramkrishna Forgings Ltd. But before that, let me introduce ourselves. We are PA Wealth, an investment services group. We offer stocks PMS, mutual funds, alternative investment funds, insurance, and startup investments. Every week, we upload research videos on different companies, mutual funds, and financial topics. Stay ahead of the curve with the latest trends and insights by subscribing to our channel and clicking the bell icon to get notified about potential multi-bagger stocks. Let's take a look at the sector outlook. The domestic demand for commercial vehicles is strong, driven by e-commerce, agriculture, infrastructure, and mining. Medium and heavy commercial vehicle sales are growing despite challenges like semiconductor shortages and fluctuations in steel and plastic resin availability. Global demand for trucks remains resilient, and major manufacturers and suppliers are optimistic about the industry's future. Now, let's delve into the product portfolio of Ramkrishna Forgings. First, automotive. RKFL is one of the largest manufacturers of auto components in India, serving both the original equipment manufacturer and Tier 1 markets in the commercial and passenger vehicle sectors. The company produces a wide range of products, including front axle and steering components, axle components, suspension parts, transmission components, and engine components. Second, non-automotive. RKFL also caters to other industries through its non-automotive segment. Here's a breakdown of what this might include. Energy, in which RKFL manufactures critical components like drilling equipment, valves, and other related machinery for the oil and gas and power sectors. Railways, in which RKFL produces forgings for railway components, including bogie frames, couplers, and other critical parts used in the railway industry. Farm equipment, in which RKFL manufactures components for agricultural machinery and equipment, such as tractors, harvesters, and other farming tools. Off-road applications, in which RKFL supplies forgings for heavy machinery used in construction and mining, such as excavators, loaders, and bulldozers. Now, let's look at the operational capacity of Ramkrishna Forgings. As of the first quarter of the fiscal year 2025, the installed capacity was 229,510 tons, an increase from 210,900 tons at the end of the fiscal year 2024. This capacity includes 24,000 tons for ring rolling, 56,100 tons for forging, and 130,800 tons for press operations. The capacity utilization for the fiscal year 2024 was 91%. Now, let's discuss the revenue segments of Ramkrishna Forgings. First, segment-wise revenue. Automotive is the largest segment of the company's revenue, accounting for 80.70% for the financial year 2024. This is followed by the non-automotive segment, which accounts for 19.30% of the total revenue. Second, geography-wise revenue. Ramkrishna Forgings derived 57.50% of its total sales for the financial year 2024 from the exports market. Domestic sales accounted for the remaining 42.50%. Let's take a look at the shareholding of Ramkrishna Forgings. The promoters are the largest shareholders of Ramkrishna Forgings with a holding of 43.17%. Mutual funds hold 1.47% of the shares. Foreign institutional investors hold 24.54% of the shares. The public holds 29.30% of the shares. Other institutions include several investors, such as banks and insurance companies. They hold 1.52% of the shares. Now, let's look at the management of Ramkrishna Forgings. Mahabir Prasad Jalan is the founder of Ramkrishna Forgings Ltd and served as the non-independent executive chairman from 2009 to 2023. He has done his graduation in mechanical engineering in the year 1970 from BITS, Pilani, and has more than 30 years of work experience in forgings. Naresh Jalan has been managing director of Ramkrishna Forgings Ltd since November 2006. He believes and advocates a customer-centric approach that has filtered down to every decision and action in RKFL. Naresh holds a master's degree in business administration from Symbiosis College. Chaitanya Jalan serves as an executive director of Ramkrishna Forgings Ltd. He has been in the board since 2019. Chaitanya completed his Bachelor of Commerce degree from St. Xavier's College, Kolkata in 2019. Milesh Gandhi is currently the director and head of marketing and sales at Ramkrishna Forgings Ltd. He is associated with the company since the last 23 years. He completed his undergraduate degree from the University of Calcutta and his master's in management from Indian Institute of Management, Calcutta. Lalit Kumar Khetan is associated with Ramkrishna Forgings Ltd as the Chief Financial Officer and Executive Director since 2020. He has several years of experience in all aspects of financial analysis. He completed his undergraduate degree from the University of Calcutta. Now, let's focus on the financials of Ramkrishna Forgings. The company's revenue has grown at a CAGR of 18.03% over the past 10 years, increasing from 754 crore rupees in financial year 2015 to 3,955 crore rupees in financial year 2024. Subsequently, the company's profit after tax has also shown growth, rising from 75 crore rupees in financial year 2015 to 341 crore rupees in financial year 2024 at a CAGR of 16.35%. Let's now turn to the management commentaries to get a better understanding of the company's performance. RKFL is expecting a 15 to 20% volume growth on a consolidated basis in the near term. The production of commercial vehicles in India is set to grow at a 4% to 5% CAGR between financial year 2024 and 2029. The production of LCV goods is expected to grow at a 5% to 6% CAGR over the same period. The company plans to expand forging capacity with a warm forging press, upset forgings, a 6,000 million tons press line, and a new cold forging setup at its Jharkhand plant. The company anticipates generating approximately 250 crore rupees in revenue from its cold forging facility starting from financial year 2026. Currently, the passenger vehicle segment contributes 2 to 2.5% to its top line. Management expects passenger vehicles' share of revenue to expand to double digits in the next 2 years. On August 23, 2023, RKFL acquired 100% of the fully paid-up equity share capital of Multitech Auto Private Limited and its wholly owned subsidiary Mal Metallics Private Limited. In addition, the company is in the process of acquiring JMT Auto Limited and ACIL Limited. The company has secured an order worth 270 crore rupees for 32 sets of Vande Bharat train sets, with a timeline of 2 years for completion. The management has set standalone Capex targets of 400 crore rupees for financial year 2025 and 350 crore rupees for financial year 2026. The expanding e-commerce sector is driving demand for light and medium-duty vehicles, fueling the growth of the global CV market by 4% in volume and 6% in value from financial year 2023 to financial year 2029. The OEM has commissioned the cold forging press line at 100% capacity, booking it for approximately 125 crore rupees, with a contract valid for 7 years starting from Q1 of financial year 2025. Let's look at the strengths and weakness of Ramkrishna Forgings. Strengths. First, strong market position. RKFL, with over 4 decades in the auto components industry, has established robust relationships with leading OEMs, enhancing its understanding of market dynamics. Second, healthy operating profitability. The group, a major Indian manufacturer of forged automotive components, has diversified into non-automotive sectors like energy, construction, and railways. Operating margin averaged 22 to 23% until fiscal 2024, with recent acquisitions boosting revenue by 335 crore rupees. Despite higher expenses from acquisitions, operating margin in half 2 of 2024 dipped to 21% from 22% in half 2 of 2023. Future prospects include sustained profitability over 21%, driven by scale benefits and effective cost management. Weakness. First, exposure to revenue concentration risk, cyclicality in the automotive industry and change in government regulations. RKFL faces significant revenue concentration risk with 50 to 55% of revenue coming from its top 5 customers. It heavily relies on exports to Europe and North America, over 40% of revenue, exposing it to cyclicality in the automotive industry and regulatory changes in government policies. Diversifying into non-automotive segments and expanding geographically are crucial strategies to mitigate these risks. Second, working capital-intensive operations. The company's operations are highly capital-intensive. They have to maintain a high level of inventory for extended periods, including raw materials and goods for export. As a result, this has constrained its return on capital employed. That's all for today. We hope you found this video helpful. If so, please give it a like and subscribe to our channel for more research-based financial content and click the bell icon for potential multi-bagger stocks. In the comments below, let us know what topics you'd like us to cover in future videos. Thanks for watching.